Nvidia has been performing exceptionally well, leading the AI and GPU markets. With earnings released on February 26th, could this be a turning point for the stock? Will it continue to climb, or are there potential risks that could cause a decline? I will cover everything you need to know and help you decide if now is the right time to invest. Back in 2021 to 2022, Nvidia was in rough shape. The stock had plummeted almost 70% in what seemed like a never-ending downward spiral. The bears were out in full force, calling for further drops, and many investors had thrown in the towel. But what happened next? An absolutely mind-boggling 1,300% rally that took the stock to new heights by November 2024. This surge was so powerful, Nvidia even implemented a 10-to-1 stock split in June 2024, when the price shot past $1,000 per share. That's what you call a turnaround. Since June 2024, things have got interesting. Nvidia's been trading sideways, caught in what we call a consolidation phase. And you know what happens during these periods? Social media lights up with the usual doomsday predictions. Market crash this, end of the world that. Every minor dip gets amplified into the next big catastrophe. But here's the thing. Sideways markets are totally normal, particularly after a 1,300% rally. Prices swing up and down, which is the nature of sideways markets. And people try to find meaning in every move instead of letting the market do its thing. Remember, the trend has been up since that 2022 low, and that's the bigger picture we need to keep in mind. Now, let's talk about the DeepSeek bombshell that caught everyone off guard. The Chinese AI startup came out of nowhere and sent shockwaves through the market. DeepSeek's announcement rattled the AI sector, contributing to a broader tech sell-off where Nvidia dropped nearly 10% in a single session, and then a total of 20% over the following days as investors worried about this new competitor. DeepSeek's secret weapon? They developed AI models that perform just as well as the big players, but at a fraction of the cost. We're talking about their R1 model being trained for just over $5.5 million. Pocket change in the world of AI development. Their approach to AI optimization means companies might not need as many of Nvidia's expensive GPUs, and that scared the market. But guess what? Nvidia brushed it off like the behemoth that it is. Despite all the panic, the stock has climbed over 21% since then. That's what happens when you're a market leader with a proven track record. Even when President Trump announced new semiconductor tariffs in January 2025, Nvidia kept pushing higher. That's the power of a $3.5 trillion market cap company that's going toe-to-toe with Apple and Microsoft to be the first to hit $4 trillion. Now, before we dive deeper in Nvidia's recent earnings, let's look at how other tech giants have fared this earnings season. It's been a real mixed bag, to say the least. Microsoft dropped 5.5% after their report, while the new kid on the block, Palantir, soared 21%. Apple initially popped, but then dropped. Google took a 7.5% hit. Netflix exploded 15% higher. Amazon dipped around 2.5%. Meta soared since its positive earnings, and Tesla dropped 17% following earnings before the recent bounce. What's particularly interesting is that Palantir, Meta, and Netflix are setting record highs and trending upward, while heavyweights like Microsoft, Apple, Google, Tesla, and Amazon are all consolidating. This tells us something important though about market dynamics. Even during a tricky earnings season, strong companies can maintain their stability through consolidation phases. It's not the end of the world that social media would have you believe. Now, this was recorded a few days before Nvidia's earnings in anticipation of earnings release. So let's look at our options. Nvidia has a history of gapping on earnings. If it has gapped up or down on this earnings, we first must look at where it is in relation to the consolidation it has been in since June of last year. If the stock gapped up towards the consolidation high, that's positive momentum. but we'll need a confirmed breakout above the high to signal the next upward phase towards $200. If it gapped down but stays above the base's low, we'll need patience to see if it drops further or reverses back to the all-time high. These technical levels are crucial for understanding the stock's next move. Okay, looking ahead, several factors could push Nvidia towards $200 and beyond. The demand for AI infrastructure isn't slowing down. Major tech companies are pouring billions into AI data centers, which means sustained demand for Nvidia's chips. Their Blackwell AI processors are generating serious buzz despite potential growing pains in the initial rollout. The analyst community is overwhelmingly bullish. Out of 43 Wall Street analysts, the average price target is around $166, with some seeing it hitting $220. Nvidia is also making strategic moves to secure its future. They've invested in companies like WeRide, a Chinese autonomous driving firm, positioning themselves to capitalize on the growing self-drive vehicle market. This diversification strategy could open up new revenue streams beyond their core AI and gaming businesses. But as always, we must be real. There are serious risks to consider. Competition is heating up, not just from DeepSeek, but from companies like Broadcom and Marvel developing alternative AI chips. The shift towards application-specific integrated circuits, or ASICs, could potentially erode Nvidia's GPU dominance. The US-China trade tensions could limit Nvidia's access to crucial markets, and antitrust investigations into the AI industry influence are ongoing. Nvidia's at a crucial juncture. The company faces challenges from increasing production costs and supply chain disruptions due to tariffs. They're heavily dependent on Taiwan semiconductor manufacturing company, and these trade policies are forcing them to rethink their entire manufacturing strategy. The February 4th, 2025 tariffs on Chinese imports and President Trump's proposed 100% tariffs on semiconductor imports could significantly impact their bottom line. Their supply chain has already seen disruption, leading to delays and increased logistical challenges. After one recent tariff announcement, the stock dropped 2.8% in a single trading session. Analysts predict Nvidia sales will grow by an impressive 38.5% annually from 2024 to 2026. However, when we identify investing opportunities in a stock, analyst predictions play no part in our decisions. Instead, we use a simple 3-second process to determine a stock's profit potential based on charts and price action. This approach has helped us grow our portfolio by an average of over 30% per year. Watch this video to learn how you can apply the same process to your stock picking strategy.